Hello guys, I'd like to welcome you in the Flipping Markets video course. First of all, I want to introduce myself. My name is Marcel, aka Flipping Markets. I live in Hungary and I'm a session trader, which means I only trade New York Killzone. I created this video course to help you in supply and demand trading. I will keep this course as simple as possible because we all know that simplicity is key in the Forex game. There's no need to ever overcomplicate things, especially trading. That's why I kept my PDF and this video course simple. By the end of this course, you'll get a deeper knowledge about the supply and demand trading, and you have a great chance to become funded in a short period of time. So enough of talking, let's just begin. So welcome everyone in the first video. This unit will be about the supply and demand zones. As I said in the intro, I keep this course as simple as possible. First of all, what do we call a supply and demand zone? It's a zone where price rapidly pushes away from, so lots of orders were placed, creates inefficiency. Please pause the video now and check the inefficiency video before you continue to watch this, because it's necessary to check that video before you continue to watch this. So please just pause it and watch the inefficiency video. Okay, move on. It has to break structure or change character. We'll talk about change of characters in the entry unit. And finally, it has to create or collect liquidity. So we have three criteria for a supply and demand zone. And please grab a piece of paper and write it down, because it will be very, very important in the future to write these three criteria down, because you'll be able to identify the zones based on these three criteria. Okay, so the first criteria is, write it down, it has to create inefficiency. We call it IFC from now. Without inefficiency, the zone would be less valid, because zones with IFC attract spies. So price has a greater chance to tap the zone with IFC than without IFC. Okay, the next criteria is, it has to break structure or change character. A supply and demand zone will only be valid if it breaks structure or an opposite side zone. Let's see an example for this. Okay, let's see an example. As you can see, I just drew a higher high and higher low structure here, which is bullish. It creates a break of structures to the upside. Okay, as I said, price has to create inefficiency in order to create a valid demand zone or supply zone. Let's say this move created inefficiency. You won't see it here because you'll only see it in the live charts. But let's say this created inefficiency. As you can see, this broke structure to the upside. So it will be a valid demand zone. The third criteria will be, it has to create or collect liquidity, but we'll talk about that later. Okay. We have the first demand zone right here. As you can see, price created another break of structure here on the upside. And let's say this also created an inefficient move. Okay, we have the second demand zone right here. After that, price created a little structure, a little pullback, and reached its high. After the high, it changed character to the downside here. So after a change of character, price will automatically create a zone, either if it's a supply or demand zone. But we'll talk about change of characters in the entry units. Okay, so after a change of character, price created a supply zone because it will change of character to the downside. So this means supply is in control now. I will just draw a supply zone right here. And supply took over control because it broke the last demand zone, which was here. Okay, if price reacts on this zone, on this demand zone that created inefficiency and break of structure to the upside, price reacts on this zone and breaks through the opposite side zone. So this supply zone, that's why I meant by breaking through an opposite side zone, then it will become valid again. It will become a valid demand zone, because let's say it created inefficiency with the movement and broke through an opposite side zone. So yeah, let's move on. Okay, so the third or the +1 criteria is the liquidity creator sweep. I said +1 because it's not necessary to create or sweep liquidity in order to form a valid zone, but it's a really, really strong confirmation. So the first and the second criteria has to happen in order to form a valid zone. So the break of structure and the IFC, it has to happen. But the third, so the liquidity sweep, is just a confirmation. Okay, we'll talk about liquidity sweeps deeper in the liquidity unit. Let's see the criteria on these examples. So the first one is a long example. As you can see, price, let's say, created an inefficient movement to the upside, because you won't see inefficiency on this line. But let's say with candles, it created inefficiency. First criteria is fit. This was the last high point. This was the last low point. Price with an inefficient movement broke through the last high point, so it broke structure to the upside. So the second criteria is fit. Let's see the liquidity sweep will collect. We had liquidity trend line here. We'll talk about liquidity trend lines in the liquidity unit. So we have liquidity trend line here. Price swept the liquidity trend line, collected liquidity from above, and it created another liquidity on the way down. So it has double liquidity confirmation because it swept liquidity and created liquidity. So all of the three criteria are fit: inefficiency, break of structure, liquidity. Okay, the same goes on for the bearish structure. As you can see, price has a high point and a low point. Price did a pullback and created a break of structure to the downside. With impulse movement, let's say we have inefficiency here again. It broke structure because it broke through the last low point. It collected liquidity because we had a liquidity trend line here again. So price swept all of the liquidity from this trend line. Price created liquidity on the way back down to this zone. So it created liquidity and swept liquidity again. So all of the three criteria are fit. Let's apply these criteria on the live chart. So we are on the live charts right now on the 4-hour. As you can see, price was in a bullish trend. And after the bullish trend, price broke this trend and started to form series of lower lows and lower highs. So this means we are in a bearish trend right now. Okay, in a bearish trend, as we know, price will form supply chain. So supply zones over and over again being respected. This is a supply chain. Okay, let's find the supply zones. First, map out our structure. As you can see, we had the last high point right here and the last low point right here. Price broke structure to the downside with this movement, inefficient movement. So first criteria is fit because it broke structure to the downside here. Second is fit because it created inefficient movement. And the third criteria is fit because it swept liquidity. We have liquidity here. So price just swept that liquidity. And as you can see, price levitated back up to this supply because this will be our right supply zone. So price levitated back up to this supply and reacted on it. So I will just mark the structure. Price is currently moving in this range. We have a high and a low. As soon as price breaks this low point, it will create a break of structure. So one of the three criteria will be fit. Okay, let's see what will happen. It's moving in the range. Okay, it created inefficient movement, but it didn't break below this low. As you can see, this is inefficient movement. Okay, it broke below the low. So we have a new supply zone because it created inefficient movement, break of structure, and actually it didn't sweep any liquidity, but this is a really huge inefficiency. So this will be a valid zone. So let's just mark out the candle. We are waiting for this candle to be tapped or the last low to be broken. So this is our last low and this is our last high right now. As soon as this low breaks, we will create a break of structure and we will more likely to have another supply zone. Let's see what happens. Okay, as you can see, price created another inefficient movement to the downside and broke structure. So this means we have another supply zone, which is up here. Okay, let's play price. Waiting for a pullback. Okay, the pullback happened. So we are currently moving in this range. As soon as this low breaks, it will create a break of structure to the downside and will form a new supply zone. Wait. Okay, as you can see, price created another break of structure to the downside. So we have a new high. Sorry, we have a new high here and we are waiting for a new low. And this means we have a new supply zone also. I will use the wick, but I will explain later why did I use the wick in the wick explain video. Okay, let's just continue. As you can see, price created a new low, which is right here. We are waiting for a pullback. Price tapped the zone. Price reacted on that zone, created inefficient movement to the downside, but didn't break below the last low point. And it broke below because all of these breaks were just weak breaks. So I will count this as a real break structure because it broke below the zone with body closer. Okay, let's just mark out this zone. This will be our new supply zone. And this method gives on and on over and over again. You can mark out supply zones and demand zones based on these three criteria: inefficiency, break of structure or change of character, or opposite side zone break, and liquidity sweep or collect. Okay, let's see a demand zone example. Okay, as you can see, we are on the 4-hour chart again, and price is in a clear bullish trend because it's creating break of structures to the upside and forming series of higher highs and higher lows. So this is a clear bullish trend. Okay, before we continue this, I will ask you to watch the weak zones video because you will need it to complete this task. And actually, I will give you your first task. I want you to mark all of the demand zones out on this structure. I will give you 1 minute for this task. Let's begin. So the 1 minute is over, and as you can see, I drew all of the zones that has at least 2 criteria: liquidity collect, break of structure, and inefficiency. Okay, let's check them out. As you can see, this is our first zone. We call it as an extreme zone because it was the start of the whole order flow. Okay, this zone changed character here and here. So this will be valid because it created inefficiency and swept liquidity. The next zone will be this one because it, as you can see, created inefficiency. It has a gap between the wicks and it broke structure, broke this structure. Okay, the next zone will be this wick zone because it created inefficiency, huge inefficiency, broke structure to the upside and collected liquidity from this region. As you can see, here's another zone, this small zone, because it created inefficiency to the upside, broke structure, collected liquidity. Price reacted on this zone here and just broke below a little bit. But after the broke below, price created this demand zone again, broke structure to the upside, created inefficiency, and it didn't collect any liquidity, but it will be a valid zone. After this, price broke structure to the upside here with this candle, created inefficiency, and swept liquidity from this region. Okay, let's move on.